Hi and welcome back. In today's video, we're going to be talking about supplemental insurance, the basics around it. Sometimes it is referred to as secondary or additional insurance. So let's get started. What is supplemental insurance? It's a secondary coverage that is used to provide additional coverage that exceeds your primary. So it fills in the gaps. It also might cover expenses that are tied to your primary insurance, like copays, deductibles, and other out-of-pocket expenses. Do you need supplemental insurance if you already have a primary insurance? The short answer is no. This is based off of your specific needs. Some people like the peace of mind of having a secondary plan that will kick in should they need it, and for others, it's just not necessary because their primary plan covers what they need. In most cases, having a supplementary plan is something additionally that you are paying for. What types of coverage does supplemental insurance provide? So the type of coverage they provide depends on the type of policy that you get. I'm just going to cover some of the more common ones that are able to be bought, but there are additional ones out there. Umbrella insurance. So umbrella insurance goes above and beyond the coverage limits that you have of your primary. This is usually tied to like homeowners insurance, boat insurance, car insurance. For businesses, it can also be in addition to your liability insurance. So this is just going to kick into effect if a claim goes and surpasses the maximum that you have of that primary. It also is generally used to protect you from costly lawsuits. Excess liability insurance. So this is really similar to the umbrella insurance in that it covers liability and excess. So anything that surpasses the maximum liability that you have from your primary plan, then this one will additionally cover up to their maximum. Essentially, it's just an extra layer of protection. Gap auto insurance. So this is the one I think most people are familiar with, and that is for when you finance or lease a car and then you have an accident that totals the car or the car gets stolen. Gap insurance will cover the difference between what the insurance company pays you for the car and what you owe on it. Travel insurance riders. So this is one that not a lot of people are aware about, but is something that might be considered for those who travel often and for some businesses in which travel is a frequent thing and part of business. It is something that those companies generally will look into for their employees. Travel insurance riders, what they do is they kick in when you are away from your designated area. So if you are traveling and you go to another country or another state that is not your primary location, then it will kick in because you are traveling. So these riders can be added to normal or standard traveler's insurance if you get it, but there are additional riders that you can get that will cover exclusions that your travel policy might have. So this might include rental, collision. This might include like if you have a medical crisis in a place and everything is out of network. And it also could potentially cover you if there is a cancellation in your travels due to a national emergency, or let's say that you are traveling and all of a sudden something happens like a natural disaster in the area that you're traveling at and you cannot be transported back, then this insurance usually will kick in. Gap health insurance. So similar to your Gap auto insurance, there is Gap health insurance, and it is usually called supplemental health insurance, and it is what kicks in to cover copays, cover deductibles, and sometimes these policies also include riders that will pay you some money if you are out from work due to an injury or illness. Medigap insurance. So Medigap insurance is also called is also called Medicare supplement insurance, and this is a policy that kind of covers the deficits that might be in Part A and Part B of Medicare. So again, this covers expenses such as copays, coinsurance, and deductibles. Critical illness policies. So critical illness policies generally pay out lump sums if you get a critical illness. So this is usually like a heart attack, you got cancer, or you had a stroke, and therefore it is likely that you will be out of work for a good amount of time. So this lump sum is to cover that, but also understand that the care that you receive for these type of medical crises generally tend to be more expensive because they are longer term than your standard injury. Hospital indemnity insurance. So hospital indemnity insurance is a policy that pays you if you are hospitalized. So generally with these policies, there is a daily rate or a weekly rate. And generally there's a different rate if you are in ICU than if you are just under the general care. I'm not sure what that floor is called, but if you aren't in ICU, then there's a lower rate, but that can go from daily, weekly, to some cases monthly, dependent on your plan. So some plans have extended amounts, so they'll cover you for an extended amount of time. Some do not and have a max cap. Again, you have to really look into the specifics of the plan that you agree to. How does supplemental insurance work with primary insurance? So supplemental insurance typically kind of works like as a secondary insurance. So you always file first with your primary insurance, and then what is left over is then what you will then apply for your supplemental insurance. In some cases, like the hospital indemnity, they will require your medical records to confirm how long you are in the hospital for, or how long it is estimated that you'll be in the hospital for. The same also applies to critical illness insurance, where they will request your medical records to confirm what type of critical illness you have and therefore what you are entitled to. With those type of plans, there are different amounts that get paid out dependent on what type of illness, what type of stroke, if you had multiple strokes, if you ended up paralyzed, etc. There's a lot of different scenarios that they provide different amounts of money for. Are there limitations to supplementary insurance? Yes, like primary insurance, a lot of these supplementary insurances also have exclusion lists. They also have scenarios, they have maximum caps. They will give you a list of things that they cover and things that they don't cover. And that is something that you need to be familiar with. Another thing is that supplemental insurance plans could potentially have additional exclusions. So there might be a wait time in which if you file a claim within a certain time frame, they will not cover it. They may have certain things like illnesses or injuries related to a sport. There's a lot of different caveats and eligibility criteria that you need to be aware of. Can you purchase supplementary insurance if you have a pre-existing condition? So the answer is it depends on the insurance company that you are going with. Some do provide coverage, some do not. There is some plans out there that will have a higher premium and have a much lower maximum coverage. They will for certain things if it's already a pre-existing condition. It's just something that you have to look into. And also it depends on the supplementary insurance. Not all supplementary insurance is related to your health. It could also just be related to covering your assets or adding additional riders because the property that you have is above a certain value. How much does supplemental insurance cost? So I can't answer this question for you because I don't know what type of insurance you are going for. I don't know your individual picture. I don't know your scenario, your circumstances, your health, your age, your risk factors, etc. Only you kind of know that. And so I suggest that you talk to an insurance broker when you are looking up into these type of plans to find out what are the current going rates for your area. It can also be state specific. There's just so many different factors that go into a rate that I cannot guesstimate or give you a range. Where can you purchase supplemental insurance policies? So these can be purchased through a variety of different channels. One is knowing an insurance broker that deals with that type of insurance that you are looking for. In some cases, there are websites that you can go and look into. Your employer might have a couple of options because generally they get a cheaper rate with group insurance policies than what an individual might find. There's also governmental assistance programs out there where you can go and speak to someone and they will help you navigate, especially in the medical world, different insurances that will provide you coverage. Can you cancel or change your supplemental insurance coverage? For the most part, yes, you can. In certain scenarios, there might be a penalty, so you might have a wait out period, or if you cancel it, you can't re-enroll later. You may have prepaid or you may have not prepaid, and so you may cancel it but still are required to pay the next month. There's a lot of nuance in this question, so it depends on your personal situation. But yes, in general, you can cancel it, and for some cases, you can modify it to be more beneficial for you, something that you have to talk to with the insurance company. Is supplemental insurance tax deductible? In general, your premium that you're paying for supplemental insurance is not tax deductible. Again, in general, please talk to a tax professional for your specific circumstances. There might be a way that you can write it off, but I don't know your situation, and it is all dependent on like the type of work that you do. But in most cases, no. The amount that you're paying in monthly insurance premiums or annual insurance premiums is not a tax deductible write-off. However, in most cases, the amount of money that you receive from filing a claim to that supplemental insurance is usually tax-free. Not all policies, but in some cases, like short-term disability, if you file a claim and get money from them to cover your short-term disability, that income you receive is not considered income that is taxable. But this could also be dependent on your state. So again, this is speaking in general terms. You definitely need to talk to a tax professional so that way you are aware for your own circumstance. So yeah, that's the basics around supplemental insurance. I hope you found this video helpful. If you can, please give it a like. If you are new to this channel, thanks so much for tuning in. I appreciate that you saw my thumbnail and thought it was interesting enough to click it and learn some more personal finance topics. If this is something that you enjoy, I highly recommend that you subscribe to the channel because on a weekly basis, I do topic breakdowns like this, and then I also talk about my personal debt story. Now, for those of you who are tuning in for a second time or already subscribers, thank you so much for continuing with your support. I really appreciate it. It is just something that keeps me going and something that helps remind me that what I'm doing is helpful for somebody else out there. So as always, if you have any questions, please leave a comment down below. If you are not comfortable leaving a comment on YouTube, you are more than welcome to use my website, debttail.com. There is a contact page where you can fill out a form and you can reach my inbox there. So if that is something that is beneficial for you, again, debttail.com. As always, I hope you have a great one and I'll see you in the next video. Bye.